Welcome to the All About Alts podcast, where we explore the world of alternative investing to help you find financial independence. Join our host, NewView Trust's president, Jason DeBono, as he covers a variety of topics with different guest speakers to discuss tax and alternative investing strategies. It is never too late to start taking control of your financial future, and we are so excited for you to be joining us for this opportunity to hear from some of the best in the business.
Welcome back, everybody, to the All About Alts podcast. I am your host, Jason DeBono, and today we are joined by a special guest, Artem Milinchuk. He is here joining us all the way from Washington, but he is here as a guest to help us understand a little bit of agriculture and farmland and kind of this asset class that everybody knows about, but not many people understand how to invest in. So Artem founded FarmTogether, which we'll spend some time talking about. But without further ado, Artem, welcome to the show.
Thank you, Jason. Good to be here.
Yeah, and we're going to talk about kind of how you ended up in the ag and farming side of the world and kind of how that looks. But let's start a little bit by just maybe helping the listeners kind of understand, how you kind of in a roundabout way ended up where you are and founding a financial technology firm on the real estate side, specifically in the ag world. So, I know your background probably more than most, but born in Russia, moved to Canada, went to college at Wharton School of Business, a fantastic school. Moved to the U.S. back in 2016. Tell us a little bit about that journey. I mean, you've covered some different continents as well as certainly some different cultures. And how did that look, and how'd you end up kind of where you are today?
Yeah, absolutely. So I think for me, the connection to farmland was very early because in the late 80s, a lot of people back in Russia had these little plots of land that they worked on. And that's how you sustain yourself because, we had a failing economy. And then when the market economy thankfully hit, I was just night and day. And even as a young kid, I was blown away by how suddenly full the shelves became in stores. And I think it made me really realize that, economics done right can be the best thing in the world, and economics done wrong can mean poverty and misery. So it's a very emotional thing for me. And that's why I went to study finance and economics. And I did my bachelor's and master's back in Moscow, worked in finance for a few years. And then 2007, moved to Canada. I really wanted to be the best at what I do. And I wanted to do it on a global scale. And I think, North America, US, Canada, that's where things really happen. And I had the fortune to work in investment companies in Canada for 10 years, investing, amongst other things, in farmland, in agriculture. And that's why I started FarmTogether as well, is because I saw the massive opportunities there and how few people still had access who knew about farmland. So there's an educational and access aspect to the mission of FarmTogether.
Well, cool. And you're, you've seen really, agriculture through a lot of different lenses. It's a very interesting perspective that you bring from, seeing sustainability as the core and really seeing it from that other side. I think a lot of us, if we all have driven past some form of farmland or ag land in some way, shape, or
flown over it.
Yeah, flown through it. So we don't necessarily think about, we know that it stocks the shelves and we know that it helps. We don't really think about the sustainability side of that. And you've been able to be on both that consumer side of that, but then also on the investment side of it, working with pension funds, actually underwriting it and buying into it. That's a pretty cool perspective from really two different lenses.
Thank you. Yeah, there's two aspects to how we think about our investors. So there's the institutional investors, and there's a lot of benefits to institutional investors and retail investors, a lot of benefits of farmland to retail portfolios as well. And really, at the end of the day, when you think about investing, you want to get more money than you put in, and you don't want to lose money, right? And so it's pretty simple. I try to really go back to the basics, which is I love farmland because no matter what happens, tomorrow we're all going to have to eat and drink water, which is another way that you can invest in water through farmland. And that's what I love about it. It's there's never a question of if what we're doing is needed for the world or if this is a good investment.
Yeah, yeah, I think everybody would certainly agree. The amount of items that farm and agriculture produces, worldwide is just incredible. You mentioned something that I want to make sure our listeners kind of understand and really get. You mentioned institutional investors, and when we any of us here on the show use that term, we're talking about the big hedge funds and pension funds and large scale investors that are writing significantly large checks. They're
Hmm.
backing a lot of the real estate that goes on today, and that's very common. A lot of people don't see that. But when we talk about retail investors, that's really mom and pops. That's all of us being able to access investments, and one of the things I think that I love about what I've learned over the 18 years I've been doing this is that really the power and the people that we continue to try to bring on the show are the ones that have taken, historically institutional grade investments
Hmm.
and really made them accessible and available to the retail investor. Because let's face it, most listeners on this show wouldn't have the wherewithal to go out and buy a piece of farmland. If they did, they were already in that business, generationally, or had some connection into it. It's not an asset class that you would buy, yet the opportunity is huge. So talk a little bit about that. And I know, just from a institutional investment standpoint, being on the side of pension funds, why were these big pension funds, billion-dollar pension funds, why were they investing in ag, and that sort of asset class?
And even $100 billion funds. Yeah. I want to demystify institutions a little bit, because we always talk about them as this entities that have their own agendas that are nothing to do with humans. I mean, at the end of the day, they still serve the same people. It's the retirees. In my case, it was the teachers of the province of Ontario. And really what they're looking for is to pay pensions. So for someone like Ontario Teachers Pension Plan, which is now close to 200 billion, and for a lot of pension plans like them, it all still boils down to the same things. They need something that is stable, that is long term, that is going to beat inflation, that is going to diversify the total portfolio, because you need to have stability in your payouts, and that has low return on headache. Because one thing with investing in the last few years is everything's going up, down. I mean, it takes a lot of work to follow the markets and do investing well. And I don't know about you, but like, I want my money to work for me, not me working for my money. So Farmland is great because of that. And that's I think those are kind of the main aspects of institutional investing that are at the same time speak to retail investors. And we have a lot of retail investors on our platform. I think latest count is something like 1,800 clients that have invested with us, and that's, I think, one of the big things that attracts them. I also want to touch on what you said about retail investors not having access to this asset class while institutions do. That is 100% correct. And what I'm proud that we bring to the table is our team that has worked at these big institutions, Hancock, Prudential's, Ontario Teachers. So you, as a retail investor, get all the benefits, or most of the benefits, from our team and being able to manage that. And then at the same time, there's some aspects of us being able to move quicker, be more flexible, and so we're able to win deals that institutions cannot. So there's best of both worlds, I think, with us.
Well, anytime retail investors can start accessing institutional grade investments without having any of the background or the training or knowledge or the money, to the same degree, is, I think, a win for everybody. Because when it's all said and done, there's so many different ways to earn and make money. When I started doing this back in 2005, I thought real estate investing was you buy a rental property, you rent it until they move out, and then you go in and you clean out all the stuff they left behind, and then you rinse and repeat. And, what I've learned is that not only are there hundreds of ways to make money on any one transactions, there's also hundreds, if not thousands, of asset classes just inside the real estate realm. Forget about moving into even different asset classes. So let's talk a little bit about that in the concept of agriculture as a larger heading. Give our listeners some insight and ideas into what are the different types of asset classes that would range in there, whether it be different uses of the land, different ways to make money. What would some of those high level, investment opportunities, not necessarily available, but just in general, that you've seen over your career, people use as a tool to make money in the agriculture space?
Oh yeah, and I think it's great that you brought up real estate. As we compare farmland to different asset classes, I think real estate is one that is the closest. Some others are gold, timber, infrastructure. Broadly, the way you make money in farmland is similar to real estate, that you can just buy land and rent it out to a farmer, which to a lot of people not in agriculture sounds strange. But in fact, 40% of farmland in US is rented out. So it's a
Wow.
very, very common practice for farmers to rent the land that they operate. And that is the simplest one to do, but it's also the lowest return and, of course, lowest risk, lowest complexity. As we start moving up the risk reward complexity curve, you get a few more levers or dials that you can touch on. So you can do what's called a flex lease, and it's when you get paid fixed rent from a farm and also a premium based on the crop prices. And that's what we do oftentimes with our corn and soybean farms. Then you can move into revenue share. You can move into profit share. And what we do a lot of is direct operated farm, where the farmer or farming family, farming business will essentially be like a contractor. They'll be doing everything, and you as an investor have the full exposure to all the costs and all the profits. So if the crop prices are doing well, if you did a great job on the trees, on the farm, you make more money. If you didn't, you make less money. And that's what you pay us for, because our team comes from decades of experience managing farmlands, operating farms, understanding best practices. And we constantly monitor what are the latest practices, what are the latest technologies that we can implement. So you really that's what I think is really exciting about working with us, and where you pay our management fees, frankly. But that's kind of the broad strokes of the spectrum of returns. And I can talk about the numbers as well, but in terms of the underlying mechanics, it's pretty simple.
Well, it sounds like, you've got an entire pendulum, and that pendulum can swing from, just owning the dirt and really doing nothing more to really owning it all, and sharing in the success or failure, of that harvest. And so that's a pretty cool spectrum. A lot of times in real estate, the spectrum's a little bit smaller in terms of how you can participate, but being able to not just own land, which has its own benefit, but actually harvest the land, truly harvest it, which can and maybe sometimes have more value than the land, and maybe some years less, is a pretty cool spectrum to be able to navigate through. You're in your background. I mean, you went from you're with the Ontario pension, right? The teacher's pension. You did some time at a family office, and then you kind of transitioned over into farm tech on the produce side. Let's talk a bit about that, because I'm intrigued by that, because I think if I look at your background, it's really the farm tech coupled with your investment background, education, and work environment on the investment side coupled together is kind of maybe where FarmTogether at least started to take shape. But let's talk a bit about the farm tech side. How did you get into that? That's a big jump from buying farms for a pension plan to running operations as a VP for really a produce technology firm. So yeah, talk about that transition and maybe some of the why and how it fueled where we are today.
Absolutely, Jason. And I wasn't involved in buying farms for the pension fund. I did when I was working for a private equity fund, just to clarify. But the pension fund is now actively investing in farms. The idea for FarmTogether came to me around that 2015, 2016 timeframe, when we saw an overall explosion of alternative investing, as well as a much more real push into ESG, into sustainability in investing. I joined the company called Full Harvest in 2016, 2017, before starting FarmTogether in late 2015. 2017. It's a company that is very successful today. They are a marketplace for farms that have what's called number two produce. And it's all the fruits and vegetables that get essentially thrown out at farm level for various reasons. From a simple one that I love bringing up, but when you buy your celery hearts and you go in the store and there'll be packs of 3 and they're all like perfect size. Well, nature doesn't work that way. They don't grow like that. So they cut off the top inches and just throw it on the ground, which is a huge waste because it's water, it's labor, it's fuel. And so what Full Harvest does is they take that at farm level and then will use logistics technology, marketplace technology to link it with, for example, juice companies, right? So you can drink your green juice and from that produce. And so it's a win-win-win because the juiceries, they pay less, the farms make additional money, and you save a ton of water and fuel and CO2 emissions. So I loved that business. I was first employee there, right-hand man to the founder, Christine Mosley. Still a shareholder in that company, so very proud of that. And that gave me a big boost in confidence that I can do this as well. A big inspiration for the sustainability aspect of farming and how much we can do there as well. So when you invest with us, all our farms are enrolled in what's called a leading harvest standard. It's still a developing standard. I don't want to oversell it, but it's a standard for sustainability at farms that now most investment funds use. And so, yeah, that was fantastic experience that, as you said, married kind of my investing background also to operational and marketplace experience at a startup.
Well, how cool. I love, getting to know people a little bit more and really understanding their inspiration and motivation because, coming up with a new idea is not easy and creating a new, bringing something to the market certainly is not without challenges. And I'm sure you could, share some of those and we probably will get into some of those, but the opportunity to be able to kind of have insight into where those holes are and voids are in commerce to be filled usually does come from a journey that people are on, and you kind of have walked through that journey, and here we are. Really excited to get to talk a little bit about FarmTogether. I think it's such a cool concept, and we're pretty fortunate here to see a lot of different things. And there's a lot of great marketplaces, a lot of great things out there that are being done and brought out to the retail investor. But I love the fact that that ag and sustainability and all of that is being able to be married together with individual investing. And so we're gonna get to that. Before we transition over into kind of the FarmTogether piece, and we'll talk a little bit about what that really is, maybe for those on here that aren't familiar with it. But before we do that, we're going to take just a quick pause, and we're going to turn it over to our quirky questions of the day. Always one of my favorite segments here. So Artem, I hope you are ready. For those of you
as ready as I can be.
That's right. Well, anything and everything is welcome. I would encourage you guys, keep sending your questions in. We absolutely love them. If you want to send your questions in, you can send them to Maggie with a Y at newviewtrust.com, and we'll get those into the envelope. So without further ado, Maggie's got the list. I'm going middle envelope today. All right. Here we go. All right, it's a good one. If you could invent a holiday, what would it be called, and how would people celebrate it?
Oh boy. I think it would be reading day, and it's when you have to go outside with a book and read it, and then anyone can come to you and ask you, like, what book are you reading, or like, what are your favorite books, and you have to explain why. So it'd be just like this massive outdoor reading campaign.
All right. Well, that's I absolutely love the reading element of it, no doubt. I think that's certainly a dying item, unfortunately, but this is how you can tell where people live geographically, because as a Florida guy, in the middle of summer recording this, I'm thinking to myself, I love the idea of getting out and reading a book, but I don't know if I'm doing it outside in Florida today. But But reading day it is. If anyone wants to run with that, there you have it. Just make sure that you give credit back where credit is due. Question number 2. It's going to put you on the spot. What's the funniest joke you know by heart?
I think it's this joke from a classic Batman and Joker cartoon. So the two lunatics escape from the asylum, and they're running on the roofs, and then between two buildings there's a gap, and so one lunatic has a flashlight, and he tells the other lunatic, I'll shine it over, and you can walk to the other side of the building. So the second lunatic says, do you think I'm crazy? I know you're just gonna switch it off midway. That's the funniest I know by heart.
Well, that's a good one. I think those are always some of the best jokes that easy to share, but give you a little bit of thought into it. I like that one. All right, quirky question number 3: pancakes or waffles, and why?
Pancakes, especially like the thin pancakes. Well, it's like more crepes. It's a very traditional Russian food, something that a lot of good memories when grandma used to make them on like holidays or weekends. So delicious with jam, homemade, all the stuff. So 100%, yeah. Thin pancakes, crepes.
Pancakes it is. There you go. All right. Well, Artem, thank you for participating in our quirky questions of the day, and thank you guys for continuing to send those in. Yeah. We'll keep having some fun with it. So, well, let's turn back now and kind of get to the second half of the show. We talked about your background and kind of how you navigated through, and a little bit of the things that along your journey that have caused you to kind of see this window of opportunity. And so let's maybe go back to 2017 or maybe late 2016. You kind of said there's a market for and a need for this agriculture level asset class to be served up and delivered out to retail investors as well as institutional investors through a marketplace, which is ultimately kind of where at least FarmTogether started. Give us a little bit of background at that point around the why and what did you set out to do then, and what does it look like today? And maybe some of the turns along the way that have gotten you to where we are here about, I guess, 7 years later.
6, yeah. I think it's sort of 2017. The spark came from two sides. One was as some of my friends in tech started making good money, they were looking to diversify away from tech because all their career and stocks was in tech. And so they asked me, what's the opposite of that? What's uncorrelated? And I said, well, Farmland. And like, oh, never heard of it, but that's actually making a lot of sense. And as we started looking into specific options for them, I was just blown away by how few, if any, options there were, which made no sense to me because I was already investing in this market. I knew about it, and it looked very, very attractive. And then at the same time, again, working for these institutional investors, I saw them starting to get into it and saw how much it would be interesting to institutional investors. And we're still in the very first inning of farmland investing. There is maybe less than 2% of farmland that's owned by institutional investors, probably like 1 in the $3 trillion farmland market in the US, and even less so in the $10 trillion plus. Now probably more because I'm talking numbers 5 years ago, global farmland market, which is a shame because they're serious long-term investors that take sustainability seriously, and you want long-term investors in farmland. So that was the spark. And working at Full Harvest gave me that further fuel and momentum. And I applied to Y Combinator. So it's an accelerator for startups, got in. And then that was a spark for some of our early investors to back me. And then we're off to the races in 2018. Took us a year and a half to actually get the first farm on the platform because there was so much to figure out. Legal, structure, team. It was just me in the beginning. So it took a while. But I'm glad we waited because you want to do things right in farmland. I think it's such a long-term investment and asset class and industry. People think in literally generations. reputation is everything, and so it's really important that we are here for the long term. So we don't even position ourselves as a startup anymore. We stopped using that word a year and a half ago, and now we're just a tech-enabled farmland investment platform.
How cool. And so, you're bringing institutional level, farmland investments down to individual investors. Is that, a fair way to represent it?
That's right. Yeah. We also are actually bringing farmland up to institutions as well. There's a
Okay.
big problem in farming, in farmland investing in general. Because I think one question you and your listeners might have is, well, if it's such a great asset class, it's been around since beginning of time, like literally, it's what defines civilization, right? Agriculture. Before that, we were hunter gatherers. There was no civilization. Uh, why is it that most people don't invest in it? And one of the big reasons, it's a very offline market, and it's a very fragmented market. So for institutions, it's hard to invest because it's hard to scalably buy 100 farms. And for individuals, it's also difficult because um, the amount of information just isn't there. So a big thing of what we do is, yes, bring it to individual investors, but also it's bringing creative capital to farmers. That's the second side of the marketplace. We bring capital that they don't otherwise have for business development or generational transition that they were not able to do before.
Well, it's it's amazing how I love the fact that you point out, farmland is probably the oldest investment, traditional real estate investment that ever existed. Yet it's still very fragmented, and it's just on a trip with some friends that are multi-generational farmers, and it is a very closed network, and
Mhm.
we're starting to see that open up, and I get a little bit of it on the peripheral, of it. But it is historically been multi-generational, and as families are transitioning out of that or into other lines of business, certainly the need for capital goes up, as well as the opportunity for those
Mhm.
farms to now hit the market in a more publicized way. And so
Oh yeah.
it's exciting what you're doing, Artem, and allowing those investments to not just be shared amongst a very small group of people and decisions made, but to actually open those up to really the masses, or more of the masses. What would you say, is what's at the risk of maybe making this a sales pitch for FarmTogether, but what is, kind of your secret sauce? What makes you guys unique? I mean, there's lots of marketplaces, not to paint everybody with the same brushstroke. That's
Mhm.
unfair, but there's a bazillion platforms, that allow opportunities to access kind of quote unquote institutional investments.
Mhm.
But what's unique? What's kind of that secret sauce for you guys?
Yeah, and um, I'll start answering this a little bit differently, just to show that part of it is not even unique source, although there absolutely is a unique source. Part of it is just the opportunity itself. If you go online right now, you can buy literally one of two public REITs that invest in farmland, and you're getting a REIT type product, which is rental. And there's maybe like one, two competitors in the farm investing space to us. So it's just a very small space still in terms of options. And then what we bring to the table, coming to Unique Source, one is institutional grade investment team. Our investment team worked at Hancock, at Prudential, at Ontario Teachers. These are names that are, um, I don't want to say legends, but have been in the first two have been in the industry for a long time. They're extremely well known. There's just not that many people in US, period, that know farmland investing well. And then what we do is we marry this with a lot of our tech that allows us to scalably source, underwrite, and find hidden gems in farmland. And this tech allows us to affordably bring you investments in that $1 to $10 million range in farms where most of the farms are. And we target returns from 6-7% to 10-11% net IRRs, which, if you look at this sort of how asset class has performed in the last 30 years, it's been something like 10.5% total returns, which is very, very good. S&P 500 equities, bonds, gold, timber, you name it, they have not done as well, and with much higher volatility too, which is another way to look at risk. Um, so part of it is unique source. Part of it is just like being there in a total blue ocean opportunity. Yeah.
Well, I think for most, most listeners today, they probably haven't considered farmland as, an investable asset class. And, I think what you pointed out is so spot on. It's just not accessible. There's 100 REITs you could go pick out tomorrow, yet
Mhm.
two actually are engaged in farmland, and they're only doing it from, in a single dimension. To be able to get into that anywhere on the spectrum,
Mhm.
from the land rental all the way up into the, being able to have that farm operated and share in the profits, or the potential rises or falls in some of the production that these farms are producing is pretty cool. What would you say, if you were going to turn the table and say, hey, I'm an investor, an individual investor. I've never invested into farmland, right?
Mhm.
Maybe I've done a couple single family properties. What are the things that I should be considering? What are I won't say risk, because I think every investment has
Mhm.
risks and everybody should
Mhm.
be understanding risk in whatever they buy. But what are some of the things that I may not know to ask, or may not know to look for, things in specifically on the ag and farm side, that really in a traditional investment wouldn't necessarily matter?
Yeah. So first, some common risks. You want to take a look at the price we're paying to buy the land, right? In real estate, you buy low, you sell high. So you want to make sure that we're not overpaying. You want to make sure that you are in a crop or a commodity where US has an advantage. So, for example, almonds. Um, California produces 80% of all the almonds in the world, roughly. Um, so, is that investing in West Coast water is massive. That's unavoidable, and we, I think, do water really well. And then it's the operator who is going to actually farm the farm, and that's where you have to trust the team, us, and we, who we select. But typically, we work with extremely well-known farming companies, established with decades of track record, and so we can take a look at what they do, and we will not hesitate to let go operators, which we have done historically. For some reason, they're not performing, but that is a risk, especially if you're doing, let's say, development, because that's where the highest returns can be, but also where the highest execution risk is. Um, those were the main ones. Some other things to keep in mind: because it's farmland, it's a 10-year investment that right now is illiquid. You cannot exit it, so you have to think long term. Although we do hope to have a secondary market in the future. Um, I think those would be the main ones.
Well, and those are they all run fairly parallel,
Hmm.
to maybe some more traditional real estate
Oh yeah.
investments, but they certainly have to be thought of differently. The illiquidity one is a big one, and maybe just to kind of touch a little bit. One of the things that you know I I know we've talked, in companies around why IRAs can make such great investments for some
Hmm.
of these agriculture products, is this time horizon. And that, if you've got, not only are they great from a tax incentive and tax opportunity, that's certainly great. But being these long-term holds, they line up very nicely with a lot of individual investors' retirement accounts, and having a much longer tail on the amount of time till they need to see returns. So, are you seeing more of that? Is that an attractive opportunity for a lot of your
Oh
IRA
yeah.
investors?
Yeah. IRA investing is probably one of the most frequent use cases that we see. It just makes a lot of sense. I think our audience skews older, and it's people that have been through cycles, and so they now want something. Yeah, I always come back to this return on headache. They want something that they don't need to worry about, and with people that are planning for retirement, it's just such a great asset class. That's why entire teachers pension fund invests in it. That's why other pension funds are looking at it more and more. Um, and it's 10-year hold. After that, you could decide to reinvest. You could keep it. It pays dividends. You don't need to think of, oh, is farmland going away? Because in the last few years we had meme stocks, then we had crypto, then we had like tech stocks. You thought, you had real estate in New York, office space, commercial office space was considered to be, in New York especially, as safe as it comes, right? And then you have the pandemic and they still can't fill the offices. San Francisco has massive commercial real estate problems. So it's just, I think, when I think not just about IRAs, but building a long-term portfolio in general, diversified portfolio, it's my view that, like, you have to have farmland. And so with IRA especially, it's great. It's also, we talk about investing in public stocks versus private individual investments. This is not tax advice, but there is tax flow benefits, tax pass-through benefits for farmland that you cannot take advantage of if you're just investing in public stocks, and especially with IRAs. So yeah, we have a lot of IRAs on our platform.
Well, and we could probably talk in length about some of the tax benefits on the ag side, but we'll kind of table that. There's no doubt. I think a lot of people underestimate every asset class when used correctly has a different use case from a tax perspective, and ag is a great one. I do want to take a step backwards. You touched on something that I think is a worthy discussion, and it's curiosity for me and maybe also for the listeners. You talked about kind of the real estate world post-COVID, and yeah, I mean, I think 10 years ago, if anyone said they owned a building in New York or owned a building in San Francisco, it was like they made it, right? They checked all the boxes. They got the creme de la creme of real estate, and now they can't give the stuff away in some of these major cities.
Literally, yeah.
The world does kind of work that way, and sometimes, assets cycle. What impact did COVID have on farmland? What you were right in the thick of it, and how did it perform? What did it do to change maybe the way that people viewed it, future performance? Yeah, just give us maybe the post-COVID cliche question these days for any asset class. How did it survive COVID?
Yeah, so if you recall Q2 of 2020, that's when things just fell off a cliff. All asset prices were massively down because people thought, the world is ending. Farmland was flat. So it actually did exactly what we expected it to do, and it preserved its value. In 2008-9, before I jump to recent performance, farmland was up something like 20% during the financial crisis because it saw this massive influx of people running to safety. And then in 2022, so when we had this big correction in asset prices, farmland was up 8-9%, the index. So it's again done its thing. This is important to note, as you start drilling down into individual segments, some of farmland has struggled. So for example, in tree nuts, we have had a number of headwinds. One is because travel closed down, of course, hospitality, big users, right? That was a hit. And then we had massive input inflation that a lot of industries suffered from and still suffer. So that was a hit as well. And then we had this logistic issues in West Coast Port. If you remember, we had this long lines at LA, Oakland ports, things like that. So that was a struggle for some of the nut farms. And then we had this perfect harvest in 2020 that, you had issues getting stuff out. So you do have the cycles. And that's why, again, we really hammer down this point of, we think you should add farmland because it diversifies your portfolio. Within farmland, you should diversify, of course, as well, because different farms will have different cycles. And that's why we do a 10-year hold, because it's really hard to predict weather, harvest, and what next year is going to do, what something else is going to do. Yeah.
Well, it's, I think one thing that keeps coming back to center in all of this is that farmland as a whole, is pretty resilient. Yes, there are winners and losers in any cycle, in any asset class, and farmland is not excluded from that. But for all of those, as the post-COVID areas of impact have come back to normal, it sounds like all of these maybe the ones more impacted, have shown their resiliency and been able to bounce right back from it.
That's right.
Yeah. Well, it's, I think what's amazing to me is as you kind of keep, sharing some insights into the different components. And now we're talking about tree nuts, and, you tend to not even, like, for me, that was never on my radar as even an item in farmland. And it goes to show that the diversity inside of farmland is just exponential. I'd imagine there's probably hundreds, if not thousands, of different types of produce and different types of things harvested on land for various reasons during various cycles at various times. So pretty cool to get a little bit more insight into. What would you say, looking out, I think it's fair to say we're post-COVID at this point, although we're
Mhm.
still feeling some of the, some of the more either lasting or ending some of these items that have hung around a little bit longer. What's on the horizon, maybe pun intended, for farmland? What are you looking out? What are you seeing? Where's the opportunities?
Mhm.
Where do you see farmland in the next 5, 7, 10 years?
Yeah, so the major tailwinds haven't changed. You have growing population, you have improving diets, which means more healthy food and more things like nuts. Like nuts are expensive, right? I mean, you go buy a bag of pine nuts, it's $10, right? Um, but more of that. We're going to see more or demand for organic. It's insatiable, and it just keeps growing at a very good click every year. So organic nuts, organic fruits, organic vegetables. And what I'm personally excited about that I hope to see more of is increasing consumer demand for sustainably farmed products. You can call it sustainable farming, regenerative farming, uh, farming that um, helps with climate change or ideally even recaptures carbon back into the soil through regenerative farming and carbon sequestration. So as we talk about different ways that farming makes money. One that we didn't talk about is this additional revenue streams from solar and wind leases, potential carbon capture, and water banking, things like that. So there's once you have the land, it's multiple income streams that can happen. So I'm excited about all of those, and I think what we're going to see as well as this market continues developing is increasing flow for institutional capital. And that's what I really like about where FarmTogether is today and for retail investors. Typically, like the smart hedge funds, the institutional investors, they will find an opportunity first and they will rush into it. And so you as a retail investor don't have the opportunity for that. Farmland is still undiscovered in a lot of ways. Um, there is no proper tech yet to scalably access it. And so you as a retail investor, you get to potentially benefit from this repricing of the asset class to institutional investor, which I think will make it even more expensive. So the farmers who own the land are going to benefit, and you as an investor are going to benefit.
Well, we have covered a whole lot of different segments, but I really appreciate your insight. Appreciate you being here and walking us kind of through not just your journey, but also the journey of farmland as it's hit people's portfolios and continues to hit people's portfolios. If somebody wanted to get to know more, somebody had an inkling or want to understand how to invest into farmland more, can you just maybe give us some resources, and we'll make sure to put all your contact info and info on FarmTogether into the show notes so you guys can click right into that. But where would you say the starting point is for someone listening today that maybe wanted to continue their journey into
Mhm.
possibly becoming an investor into farmland?
FarmTogether.com has tons of educational materials, videos. You can log in to listen to past webinars and deals, and yet they can reach out to me. I'm happy always to talk to potential investors and clients at Artem at FarmTogether.com. We've been partners with Naview for a while now, so we like working with you guys, and we're happy to continue doing that.
Wonderful, and we'll make sure we put all that into the show notes so that everybody has it. Artem, thank you for being here. Thanks for sharing your wisdom, and thanks for enlightening all of us, myself included, into kind of this asset class that's been around forever, but nobody's really taken the time to really understand it. I know for one, it's an area that I intend to look a lot deeper at as I continue to look for new ways in today's economy and marketplace to deploy capital and seek return. So, any parting words before we wrap things up today?
No, thank you so much for having me.
Wonderful. Well, thank you. Thank you for being here. Thanks everybody for tuning in. Remember, if you have not hit the like, share, or subscribe button, to please do so. Also, if you a repeat listener and you like what you hear, please make sure you leave us a 5-star review. It helps us build the community. As we continue to kind of share, our mission is very simple. It's to bring more alternative asset opportunities and understanding to the marketplace, and not just look at investments through return, but also look at investments through return coupled with good quality tax planning and tax understanding through retirement accounts. So lots of exciting things going on. We've got a great slate of shows upcoming as well. But Artem, thank you again for your time. And thanks everybody for taking the time to join us on the All About Alts podcast.
Thank you so much for listening. We hope the information within this podcast has given you the tools that you need to find your way to financial independence. We would love to partner with you on this journey. Text ALTS, that's ALTS, to 407-708-1853 to learn more about how to get started today. Don't forget to follow us to make sure you don't miss a second of content, and we'll see you next week.